platform to talk to all of you, to get feedback. We are obviously all going through a very difficult time worldwide, and of course for the Hindu community as well, both in India and wherever our community has struck roots. So what I'm going to try and do here, rather than take you through one by one all the various measures that have been taken, which you read in the newspapers anyway, and you probably all see me on television explaining the dynamics of specific measures, it may be worthwhile for me to take you through some of the philosophy of all of this. Now, can you hear me clearly? So that, hello?
Yeah,
hello?
yeah, it is clear. It is very clear.
Okay, because suddenly the image dropped.
No, it is
So,
clear.
what I will do is, I will take you through the philosophical framework. Then you will see that our approach is consistent, and you will see why we do whatever we do, and what we are likely to do going into the future, which may be also very useful. So that then you have a guidance of this. Now, what is our fundamental problem? Not only are we faced with this very big shock, but we have a situation where there is enormous amounts of uncertainty. Now, supposing instead of this particular pandemic, we had been hit by a very large earthquake, let's say, then you have the earthquake, and then, but you know the parameters of what the damage is after a few weeks. You know exactly how many buildings fell, etc., and then you can think through the rebuilding. We have, on the other hand, a very different problem. We are dealing with a large number of unknowables, unknown unknowns, and so on, and all of these parameters are evolving. So, in this environment, how do you take decisions? That is the question. Now, there are various ways of dealing with this. One way is that you get yourself the nearest bunch of experts, and they tell you what is the best possible strategy based on their models, and you decide which one. So this is, many countries have done that, and it's a risky strategy because for whatever reason, if that particular model that you opted for turns out to be wrong, then you are in real problem. The UK faced this, for example, with its herd strategy, and very quickly it discovered that it was going off. It was not, because when you're dealing with unknown unknowns, it's not obvious that the particular path your model said is the path that the world will go down. Right now, other countries have done it as well. Singapore tried one strategy, then it had to retract and try another strategy. Maybe in a small country with a lot of resources, you can maybe change course. Sweden is doing a third kind of strategy, and so on. So different people have opted for one particular strategy, a particular path that they're going to take, and they're going to stick down that path. Some of them, when they discover that it's not working, they change to another path, and so on. We, on the other hand, have 1.3 billion people. It's like running a large oil tanker. We cannot change track halfway through. So what do we do? So let me explain this first through the medical response, and you'll see that there is a very similarity with our economic response as well. What you do is essentially what is called, those of you in financial markets may even know this, it's called a barbell strategy. Barbell strategy is a way of dealing with utter uncertainty. So what do? You basically hedge for or cushion for the very worst that you can think of and what is practically possible to cushion. And then you basically respond for the rest through a feedback loop, step-by-step approach. It's a slower approach on one hand, and a very drastic, cushioning on the other. So, when we did this with the, let's go back to middle of March. What did we have? We didn't have very much information about the nature of this disease. In fact, there's a lot of uncertainty even today, but going back in March, we had a lot of uncertainty. We knew that something terrible had happened in China, but information on that was unclear. It's still unclear. But we knew that this disease had then spread to Italy and caused large number of deaths very, very quickly. We didn't know exactly why it was happening, but we could clearly see the danger of it spreading very rapidly in India and causing all kinds of second order, third order spreads into the interior of the country. And we knew that once it spread, we would have great difficulty in managing it. So while at a time when other countries were coming out with definite directional sort of options, we opted for this barbell strategy, which is you hedge for the worst, which is do a full lockdown right up front. This is not because we knew exactly how this was going to pan out. It is also not because we didn't realize it would have enormous economic costs. We knew that. Any lockdown is going to mean basically shutting down economic activity by definition. So there is enormous economic cost to it right up front. But we hedged the very worst because who knows, maybe it's so infectious and is going to cause millions of people like in the Spanish flu. We don't know. So we hedge out the very worst impact. Then we get time to carry out testing, to figure out responses in terms of creating the number of beds, quarantine facilities, work out what works in a practical level, whether it's masks or hydroxychloroquine, whatever it is. Then you have to bought yourself some time. And then from then on, we have been, with feedback, reducing these lockdowns step by step. Now notice that we are unwinding this lockdown right now as we speak. In fact, next week, even flights will begin to take off. This is not because the number of infections has actually gone down. It hasn't. We have far more infections today than we had 2 months ago. But why are then we willing to open up now? Because in this time that we have had time to create some amount of ability to respond, whether it's in terms of testing, identification of hotspots. We know roughly how to respond should a hotspot turn up. We know that its death rates are not as bad as the initial records came out from Italy, but it's still very, very infectious. And for at least one category of the population, it's very, very dangerous, which is the older population with who may have comorbidity and other illnesses. So we have some feeling of the contours. It's not perfect, but a lot better than it was before. So we can take now is the time when we can take calculated risks with opening up the economy, and that is precisely what we are doing. This is not because we do not know that there are still risks in the system, but it means that at least we have some sense of the nature of these things that we are dealing with. So this is how we are going to unwind the lockdown. Occasionally we'll have to step back if a major hotspot is found, but basically the idea is to open systems up to the extent that is practically possible. And of course, we are increasingly relying on the states, and the states are relying on the local administration. So it's being done in a much more decentralized way than the original lockdown, which had to be done in a very centralized way and consequently came with very large economic costs. So this is how things are on the how we are dealing with this barbell strategy on the health front. Now, how do we do this same barbell strategy on the economic front? Well, the first and most important thing to do with the barbell strategy is to hedge out the worst things that can happen. So what are the worst things that can happen? Well, you can have mass starvation. You can have, of course, mass defaults happening, people missing deadlines and so on. So very, very early on in the thing, we began to transfer money to the poorest sections of the population. We had thankfully created the Jan Dhan and the Jam Trinity with Aadhaar, etc. So we had some ability to transfer direct money, get some direct transfer of food, and also gas, so that people can at least eat. This is not going to we know this is not solving poverty. All we are doing is cushioning. Now we got some time. So now what is the second order problem we have? Then we have companies were going to face, it was the end of the year, so they were going to face a whole bunch of financial deadlines. So we pushed those deadlines back. We have subsequently pushed them further back, but at that time we pushed that. Buy ourselves time again. Then we have, what we do is we realize that we now face a serious problem of cascade of defaults happening in the economy. Suddenly, cash flows dry up, and this would cause serious problems. So now what we do is we make sure that this cascade of default doesn't happen. So we do we inject liquidity through the Reserve Bank. We cause some sort of a moratorium, again buying ourselves time, and we then lower interest rates. Now what happens is we now need to begin to put some demand back in there. But we have obviously limited fiscal resources. Now here comes again the difference with other countries. Other countries have decided that they are going to, they have decided how their economy is likely to come out of this. They have a model on this, and they think that they can reflate it with one big package. We, on the other hand, have taken a different view. We think that this is not a sprint, this is a marathon. Not only is it a marathon, which means that we have to retain resources for a longer run, it also is the case that the world in which we will emerge into is not a matter of just reflating the pre-COVID world. The post-COVID world will be fundamentally different. The architecture of supply chains will be different. Risk-taking behavior will be different. New kinds of consumer preferences may exist. The geopolitics of that environment, and by the way, geopolitics, if you look through a little longer history, you'll see geopolitics is one of the overriding factors of how economies function in the longer run. So all of this is going to be different. So in that environment, simply reflating the old economy is not going to get us where we want to go. Maybe other countries, just like, having this template and simply reflating it and opting for a particular path has its own dangers. So what are we trying to do? We are essentially trying to ensure that there is no cascade of defaults in the system. We want enough of our economic structure, particularly the business side, the small and medium enterprises in particular, to survive through this cycle. So everything we do is about cushioning the shock that has happened to you so that we can get to the phase where we can open things up and at least some of the basic things begin going. We are fully cognizant of the fact that this is not going to solve every economic problem you face. But remember, we are not trying to use up all our ammunition. We are telling you repeatedly, if you listen to all my lectures and talks over television and all my other interviews, even in print, I have said, look, we are basically doing this. We are doing a step-by-step response. It may appear to be smaller in bits, but in the long run, believe you me, we will actually do a lot more. Remember always, it's very easy to spend taxpayers' money right up front. But it is your children who will have to repay these debts. So we have to be careful about what we spend. This is not because we do not have any space. We do. In fact, we have more than many other countries. On the monetary front, most countries in the West are already at zero interest rates or negative interest rates. They do not have monetary space left. We have monetary space. You are seeing repeatedly that monetary space being utilized, and we will use more of it. Similarly, we have space on the credit front as well. The banking system right now has parked very large amounts of money, 8 lakh crores, with the central bank. Now, clearly, we want them to get out there and do their job. Just like we are all in it together, and we are putting in effort from the government side, you from the business side, community at large is doing its own thing. The bankers also now need to fold up their sleeves and do their own thing and go out there and take risks. But we recognize that they may be concerned about defaults and the riskiness of various things. They will also be concerned that as downgrades happen, then you're also going to see the capital cost of doing it going up because of the risk-weighted assets being the risk-weighted capital they need going up. So therefore, we then responded to that by essentially guaranteeing 100% all the incremental loans that are to be given to MSMEs. We also then created other ways of getting liquidity through there by making sure at least in the immediate front, the NBFCs have a buyer of last resort in the credit markets. So that's why where those 30,000 crores that we put into an SPV, that will go out there and buy their bonds. We are also providing a 20% guarantee to buying bonds of various kinds, including bonds which are below investment grade, so that the credit market keeps functioning. We will manage to get these institutions running within weeks. They've already been approved by the cabinet just yesterday. We will get these out there within weeks. So again, what are we doing? At every stage, we are cushioning you from a big shock. Now, we also know that at some point, once the lockdown has been reasonably opened up, we need to go into a rebuild phase. We are not there yet, but we will get there. But for the rebuild phase, we now need to take some other thoughts into account. First, the rebuilding that we will do will be into a world, as I said, that will potentially be very different from the world we came from. If you want to understand what I mean, go back and look at when we had the last time we had some shock of this scale. This happened in the in the 1940s. This was a population that had gone through the Great Depression and then the Second World War. And the entire architecture of the world got redone at that time. Of course, many, and of course there will be many second order impacts of that, including India becoming free. So the old colonial structures collapsed. New structures were created in terms of the UN, the Bretton Woods institutions like IMF and World Bank, the Security Council, all institutions that we today use are essentially the institutions that emerged in the late 40s out of the experience of the Great Depression and the Second World War. And so these are the institutions that have functioned till now. And what we are seeing is a breakdown of that architecture. So when President Trump questions the WHO and the way it is set up, etc., he is not merely questioning a particular institution and its handling of a particular incident. This is a rethinking of the whole architecture. So that is how we need to rethink this whole thing. This will also happen to supply chains. And this is a very serious thing. And of course, an important part of what we need to do is to insert ourselves into the supply chain. So but the question is, what is the economic model that we will use in order to do that? And so this is the context in which you need to think about what the Prime Minister said about Atmanirbhar Bharat. Now let me clarify right up front, the Atmanirbhar Bharat, which is usually translated directly as self-reliance, is not a return to license permit Raj of the Nehruvian era. It is also not a return to import substitution of the old kind. So we are not returning back to pre-1991 world. Let me be absolutely clear about this. In fact, the Prime Minister in his speech clarified this also very clearly. He said this is about going out there, being confident, leveraging our strengths in order to be able to insert ourselves into the world economy. And it is about capturing global supply chains and building local brands and Indian companies and so on. So, question is, what is the way in which we will do this? So, in order to do this, the point being made is that we have to be willing to protect certain parts of our supply chains and think about it in terms of resilience. So, Atmanirbharta should be better translated as thinking of protecting the resilience of Indian economy, Indian business, and encouraging the innate strengths of it. Now, the key thing in all of this, if we are going to do this, entering into an uncertain environment, the key element in this has got to be flexibility, because we do not exactly know what this new world is going to be. How do we respond to this new world? The most important element in this is therefore our ability to have flexible factor markets and flexible policies in order to be able to do this. So this is what Prime Minister again said in his speech, and that is reflected repeatedly in many of the policies we have put together in the last 5 days. That is the context in which you have to see it. We are cushioning on one side and building out flexibility on the other side. What are these flexibilities? Well, we have started the process of liberalizing our agriculture sector. This had to be done. It was completely untenable to say that everybody else has the freedom to sell their produce wherever they wish, but the farmers have to only go to the same mandis. This would be the equivalent of asking Maruti to sell its cars only at certain mandi. We don't do that. We don't tell soap manufacturers to sell their cars to only in certain designated mandis. Why did we tell poor farmers to do this? So this is something we have opened up. And by the way, this is a major change. for the not just agriculture but for the entire supply chain, because we have also simultaneously removing the Essential Commodities Act, which was awful way of essentially allowing politicians and local bureaucrats and inspectors to essentially carry out what were unnecessary raids on our supply chain, on traders and so on, and harass them and seek rent from them. There's more than adequate literature showing why these Essential Commodities Act actually added to volatility of food prices in India rather than reduce it. And I've written an article in Hindustan Times just day before yesterday. Please read about it. It was actually this architecture was deliberately been put in 700 years ago, by the way, by Alauddin Khilji. You can read the history of it. And the reason Alauddin Khilji had put this thing together was deliberately to enrich the Turkic nobility of that time and himself, and to feed his troops cheaply while suppressing and expropriating the Indian population that he had conquered and the trading community, who we blamed for price manipulation and as a hoarder all the time. Whereas in fact the source of it was the government, the Sultanate of that time. So in a sense, this is this was a system that had very deep roots. This was the same system, by the way, which the British had to force Indian farmers to grow indigo and opium in the 19th century, and later raw cotton. And then they were forced to sell it to certain agents, and that was how the supply chain was controlled by the East India Company. I am astounded that it required 73 years after independence for us to remove from India's agricultural sector a awfully extractive system that was bad for the traders and who are often blamed as hoarders, whereas in fact what they were doing was investing in supply chains and inventories. So we are going to remove this awful system of inspectors. Just last year, by the way, 76,000 inspector raids were carried out against our traders across the country. It is absolutely indefensible, especially since something like 2 to 3% of those cases actually stood up in court over many years. So this is a kind of thing that we were doing that had been just led to corruption and rent seeking by, as I said, by the politicians and local inspectors. This is just being dismantled right in front of your eyes. This is a major reform for our agri sector. Similarly, we are also doing major reform of our labor laws. We have been debating this for years. Every economist I know of, worth their salt, has talked about labor laws for decades. We are finally beginning to do them. Some of our state governments are already beginning to make changes. There will be some people going to courts, etc. There will be one step back and forth, but ultimately the direction of doing this is very clear. We are unapologetic about the fact that we are easing up labor laws. At the central level, we were already doing this. If you will remember, we took 44 laws, we combined them into 4 laws. Now, at one level, it will lead to flexibility, but there are things in which, by the way, we will strengthen the hand of the workers, especially on things related to safety, where we do not want to compromise. We will also try to encourage various forms of formalization. For example, we will encourage that every worker has to have a letter of appointment, so that we know who the formal workers are, and if in future date we require to provide them direct support, we will be able to do so. Because right now what is happening, we are being able to provide through the provision of EPF contributions directly from the government to the organized worker. Ironically, we are unable to do this for the unorganized worker who needs more help, because nobody knows who they are, because there's no appointment letters and so on. So this formalization is an extremely important part of being able to provide direct support. We are, of course, providing direct support, but we are doing it through the JAM Trinity. But we recognize that many people fall through the cracks, even in that. So there are some problems with trying to reflate demand using that route. We are doing many other things. The other important set of announcements that came through on the supply side were on having a much more clarity on the privatization front. Although of course we have been slowly privatizing for since the Vajpayee era. I mean, this path was in fact enunciated in a sense in 1991, but it's only with the Vajpayee era that we began to see genuine privatization. And since then, we have heard a lot of murmurings about it, but always the case that we were quite apologetic about the whole thing. I think for the first time, what we have said is that we will separate out all the PSUs into strategic and non-strategic. In the strategic areas, there are certain areas where you do need public sector participation. We will have public sector participation in those areas, but wherever possible, we will allow the private sector to also come in. In the non-strategic areas, we are absolutely unapologetic about wanting to privatize. Now, of course, given market conditions, we may take our time over this and so on, but our general approach is unapologetic and clear, and I think I'm going to make this point over again. Same thing approach is about simplifying taxation. We did some of this on the corporate sector side. We intend to do this also ultimately on the personal income side. We will do it one by one, but our intention here is again clear. Even on the GST side, many people complain about the complicatedness of it. But let me say that we have done a lot of talking to industry, and for the most part, I would say people will say yes, this GST system could be better, more simple, etc. And I'll accept that feedback. But there is, I think, fair to say it is a dramatic improvement on what system used to exist before. So again, there we have made a huge jump in terms of the simplification of the system. We had also created a much better system of insolvency and bankruptcy. I think it's a dramatically improvement on what it used to be. Now, of course, given the current situation, we have to hold it in abeyance, because the last thing we want is that IBC system getting clogged by a wave of default. So right now, for emergency reasons, we are holding it in abeyance. But the fact of the matter is, again, we are willing to do difficult things, create other new structures. So it is very, very. I hope the model we are creating is very, very clear. Now, what does it mean going ahead? First of all, let it be clear that we continue to have monetary space. Indian interest rates can even fall further. Yesterday, you did have some cutting of interest rates by the Reserve Bank, and I totally agree with their assessment. I think we have the space, most likely, given that there is no inflation in the system and unlikely to be for a long time. We can reduce interest rates significantly from here. This is also part of flexibility, because any restructuring of the economy will mean that we will have to lubricate it with cheap capital. So the cost of capital has to be slowly but steadily brought down structurally. This is not a cyclical adjustment; it is a structural adjustment. In terms of lending rates, I would argue we need to think in terms of bringing those down by hundreds of basis points. Where they are now. I mean, there are still people borrowing at 11, 12% in an environment where we may be in very low inflation for a prolonged period of time. We should be thinking of bringing those guys who are borrowing today at 11, 12% should be borrowing at no more than 8%. So a 400 basis point reduction in interest rates. Those are the kinds of scales we should begin to think of. It will take several steps, but we need to begin to think of ourselves as a low interest rate country, because we have become a low inflation country over the last few years, and now we'll become an even more low inflation country going ahead. The other area where we have space to maneuver is actually on our external accounts. We have, of course, our exports will be on a slump mode. Hopefully, as the world recovers, we will go up. But also, we have had severe import compression. So much so that we are probably right now running a current account surplus, and we are accumulating foreign exchange reserves. So the rupee, many people very often come and say, oh no, this is bad for the Indian economy, and the rupee will collapse as a result of this. There is no way to make that case at all, for a very simple reason. that the exchange rate is a relative and not an absolute measure. Who will we depreciate sharply against? I mean, I'm not talking about small movements here and there. Who will we depreciate against? There is nobody else in the world who is not facing the same problem and probably facing much worse situation. And many of them now, the interest rate that they are bearing on their bonds is zero. And for all the shock that we may have to our economy, there is some inherent demand to our system, and we will recover. Whereas many economies have really struggled, and their debt to GDP ratios are many multiples of ours. Whatever problems we may have, many of the countries we are measured against, let's say, for example, the euro, large numbers of European countries have debt to GDP ratios well in excess of 100% of their GDP, and they haven't seen growth even before this crisis. So in that environment, I don't think the rupee is under any systematic pressure to depreciate or appreciate for that matter. We have more than enough resources to manage the exchange rate. Again, another reason why we can lower our interest rate without bothering with our exchange rate being a threat. So neither is the exchange rate a threat, nor is inflation a threat. So consequently, we are totally we have the space to lower our interest rates. And of course, the biggest beneficiary of that lowering of interest rates is the government itself, because the government is the biggest borrower in the economy, even in good times, not just now. This is also true of state governments that may have to borrow. So this is one big area where we should and can, slowly and steadily lower the whole architecture of cost of capital in our economy. Make our labor force more flexible. Think seriously about going out there and grabbing more of the global supply chains in an environment where clearly geopolitics is dramatically changing. Do not think of minor changes here. Anybody who is going and saying, in WhatsApp messages talking about how Vietnam and may have seen more companies moving there. That is not the game. The game is of fundamentally different scale right now. The industries that evolve out of this are of fundamentally different kinds of industries. This game is totally different. Problem is we don't know exactly what that is. We have to be flexible. There is a huge opportunity here for India. All of us together. Now, let me hand it back over, but before that, let me say that this is a shock that India, neither its government, nor its business, nor its society brought on itself. We are a victim of something that came and hit us from all sides, and I would argue that we have dealt with it very, very well so far. Who would have thought that a country of 1.3 billion people would remain under lockdown like this, with minor disruptions perhaps, but by and large peaceful? And as a society, we have dealt with it. Now with that, we are slowly unwinding and coming out of it. We are doing it in a structured way with the minimal of fuss. Now, there may be some things that may have fallen through the cracks. It's, of course, horrible to see, large numbers of migrants on our highways walking back home. But even there, we are responding. The railways have put through together trains, and we are responding to that. And of course, as we more generally open up, that itself will hopefully get taken care of. But with the odd thing that may have gone wrong, we have by and large taken the shock very well. This is also true, by the way, of the business community that has behaved exemplarily in supporting its workers wherever it could, despite not having revenues, paying their salaries. We are aware of this. This is really good. Small business has done spectacularly well. I mean, every one of you has been kept alive essentially by your kirana store in your neighborhood, who has come risking themselves to infection and has kept supplying all of India with food and whatever else necessary. Our policemen, local business, local officials, sweepers who have kept the essential services running, doctors, of course. So I think we as a country have done very, very well. I think people do not give enough credit to our social capacities, our administrative capacities, our business capabilities to have been able to survive this together. and we will rebuild ourselves together. With that, let me hand it back.
Thank you very much,
Thank
Sanjeev
you very
ji.
much, Sanjeev.
This was a very informative and an insightful session. It gave us a ringside view in terms of the parameters that led to the formulation of the stimulus package. And clearly, I think this is going to be a protracted problem. Key takeaways were that this is not a sprint, it's not a one time effort. There would be lots of iterations, there will be lots of steps as we start converging towards normalcy once this transient state gets over. And this transient state is marked with a huge amount of volatility and uncertainty and complexity and human cost. So I think there is a significant amount of challenges, not just for policy planners, but for the execution, implementation machinery, and the communications and the management of key information that goes in. And so, Sanjeev, a couple of things are coming in from a whole flow of questions on the chats. The first one is that when we look at the whole vortex of uncertainty, there has been a significant amount of churn in the labor uh, uh, force and patterns. The migration back and forth will create a significant amount of uncertainty for both the government as well as the businesses and the labor forces. So, what is the short to mid-term view you are looking at to mitigate this?
So obviously, we do not want too much migration, not just because it's a problem when all of you open up your businesses. It's a fundamental problem from our first order problem, for our first order reason why we did the lockdown, which is this pandemic. People moving around is something we really want to avoid, because obviously they move around, they also carry the pandemic with them. And the large numbers of people we are dealing with, it's one can do tests and so on, but so much of it is asymptomatic that it's very difficult for us to manage that. So so some migration has happened, and we have in many of the recipient states where they are going back to. I have to say, for example, UP has put in a huge amount of effort on making sure that the returnees are put through some sort of a quarantine in the villages, and I believe that it's working quite well. And here again, as I said, the local government is a very important element in this game. So that is one part of it, them going back. We also have to ensure that after they've gone through their quarantine, they have some sort of a job, etc. So we have put through an extra 40,000 crores into the Manrega program, so that they have some incomes and so on the ground. Some projects are being put together, so their work is being put to some useful use. But we also recognize that many of these people will have to be brought back to where they were. They were, after all, needed in their wherever the projects were and so on. Now that will depend obviously on when we end the lockdown and what way we will open up the lockdown. Now this is a very tricky thing, by the way. So let me take you through, just as an example, one industry. Let me take you through. One big industry which has seen a lot of problems as a result of this has been the hospitality, tourism, restaurants business, let's say, or that whole. Now, clearly, their business in many areas has basically gone down to zero. Now, we really sympathize with this. This is a large industry. It employs large numbers of informal people. Clearly, we need to do something about it. But it's very tricky to do something about it, because if people say you should give them a tax holiday of some sort. Now, supposing we did do it for 6 months, we give this industry a tax holiday. What will be the benefit of this? I don't know anybody who is not going on a holiday because of GST on hotel rooms. We are in a lockdown. Even if we open the lockdown, and people are not going to be rushing out to go on. I mean, some places maybe, but to the most part, they will not be. People are not going to rush into the restaurant. So we will provide some help, but with not much real benefit. So immediately you have this problem. So what do you really do with this? So the first order of benefit is that we provide them with the same generic support we are providing everybody else, which is try and make sure that we minimize the number of people who go out of business. So that is basically what we can do right now. Give them credit, working credit, make sure they don't have to service these loans for a while, provide some sort of a moratorium, allow them to capitalize their interest payments in the future period in some fashion. So basically provide them a cushion so that they don't go out of business while we figure out exactly what we can do to get them. Now, it may be that after a few months we have found a vaccine or whatever it is, people do actually begin to go back there, then fine. Then all we need to do is to encourage this industry, encourage people to go on holidays or whatever, find some way, then that is the solution to the problem. But supposing we are still in this situation in a few months' time, then we need to find another solution. Simply giving them tax breaks or something like that will not help. Then we need to think of a completely different solution. So remember, we are taking these decisions in an environment of extreme uncertainty, and be very careful when you come up with a solution. And we get lots of them, lots of feedback. And by the way, we welcome feedback. But when you do give feedback, do recognize what the usefulness of that feedback is. Number one, will it really work? And two, is it the best use of resources? For example, if industry is not going to easily come back, then we will have to think of very large scale infrastructure projects where we will have to deploy, new airports, and some of them, of course, Jawar, etc., are now ready to take off. So maybe those projects can be fast tracked, so that large construction projects happen. These construction projects then suck in cement, steel, workers, etc., and that creates demand. That's one way of doing it. We have also had people say that, why don't you transfer large amounts of money? You're anyway doing that. Now again, we have to be very careful what you mean by that. Supposing we use up the resource, the fiscal space, in simply doing one large transfer to everybody's bank account, let's say. Now, there are people in there who genuinely need a large amount, they've run out of money, they need to be supported. So, fair enough. But frankly, our impression, at least our data suggests, that a significant proportion of these people will just take the money and save it. Why will they do it? They are poor people, but in a lockdown and with great amount of uncertainty about the jobs they will have, they will essentially try and save it as long as they can. So what will we do? We will transfer a lot of money, but the second order demand effect you will simply not get, because except for those who are desperately need cash and will go out and spend, the bulk of the population will simply save this money. So what happens is, why are we doing this fiscal spend? Because we expect not just this money to go out, we expect a second order spending also to happen, and that creating jobs, etc. Now that second order spend will simply not take off, and then we are really spent. We have used up our ammunition and nothing happened. Now imagine that, and we have to, by the way, because of course there is interest on every debt we run up, which means that already our clock is ticking, and we have used this ammunition up and nothing has happened on the demand front. So these are the things that we have to think through when we are thinking of a marathon as opposed to a sprint.
Now, coming back to the marathon analogy, Sanjeev, as the recovery and the acceleration hopefully goes forward in the next phase, it's very critical that the new demand patterns are understood, and the institutional capital and reconstruction of destroyed risk capital that was available with the entrepreneur community has to be restored. And I think the best way to amplify the restoration process is to distribute the recognition of demand and addressing those demands into opportunities through the entrepreneurial class. And a lot of the entrepreneurial class at all stages, in the micro, small, medium enterprises, large enterprises, as well as in the unorganized sector, have been dramatically impacted. So, what are the specific views you are looking at in terms of encouraging the build-up of risk capital and institutional finance to direct new economic activity to some of the newer areas? For example, the COVID crisis has exposed the problems with urban housing parameters, with corporate buildings architecture design. So there's a whole lot of reconstruction and recalibration of public transport systems, and a lot of those kind of things will have to be redone. So how do we kind of look at?
So
Yeah.
at this juncture, we haven't reached that phase. That requires us to rethink many things in a very fundamental way. Right now, we are just trying to preserve ability of business to take risk, some sort of risk, even in existing areas, because even there they have been destroyed, right? Particularly for SMEs. So what we are doing, you will know that we have just created two new packages, a fund of funds and a sub debt system. Both of them we are putting some money in, and hopefully a system of leveraging that will be created to simply go there and put some capital into these SMEs, so that you see, leveraging can only happen if you have basic capital, right? So many places this basic capital itself has got wiped out. So how do you leverage? You can provide all the capital in the world. How do you leverage? So this is where we are creating this fund, which you may have heard of. It's not a very large fund, but at least we because we don't know what our institutional capacity is in distributing, very frankly. But we are putting something together to at least begin creating an institutional mechanism of putting this small and medium-sized companies to put some sub debt in there as equity, so that entrepreneurs can take the sub debt, and it's guaranteed by government. So we will take the risk, and to at least preserve to the extent possible some part of this. Now this does not address the issue you have raised, which is the big new areas that we will begin to invest into. But right now we have not reached the rebuild stage. We are still in the cushion stage. So let us go through this cushion stage. Hopefully we get this money out, get the NBFCs stabilized. This 3 lakh crores of 100% guarantee that we have, government is providing. Let that happen. All of these are getting approved on an emergency basis, as you may know, or you may be reading in the newspapers. Hopefully our systems can get it out there. Let us get it out there. The idea is that enough of our entrepreneurs survive this cycle, then only they can take the risk on the other side of it. So right now we are unwinding the pandemic. The health part of it is being unwound, but the economic part is still in the cushion phase, and we are still stabilizing things. We will, and that is why we have retained enough ammunition in there for the rebuild phase, where when we get there, we will begin to seriously rebuild. There's no point in rebuilding now, because we are in lockdown, and we may be, by the way, even with the unwinding, there may be significant constraints even for the next few months, and then we will get into the monsoon season. But in a few months' time, we will go into the rebuild phase. But when we get into the rebuild phase, we may want to make sure that all our supply side stuff we have got our labor laws in place. We have opened up our agriculture sector. We have got all these other private, we may not have privatized things, but at least we have got the philosophical framework and maybe some of the legal framework done for privatization, and so on and so forth, so that there are new areas. And of course, we have to go out there and market ourselves to the rest of the world as a manufacturing base. Whatever that new system is, it's not like it's God-given that they'll come to us. We have to go out there and market ourselves, and that will require us to rethink our taxation systems and so on, so that they are globally competitive. And by the way, those taxation systems have to be competitive even in India. One big area of reform, let me put forward, that we have to do in this new environment is legal system reforms. I have long argued, and I'm arguing again, the single biggest constraint to economic dynamism in India now is poor enforcement of contracts. And this, along with our highly complicated tax system, are the two biggest constraints to economic activity in the country. and we have to do something about it.
All right. Thank you very much, Sanjeevji. And one last question before I hand over to Ravi is that in the cushioning phase, there is demand for survival services in terms of food, medical care, shelter, uh, services to prevent the explosion of the epidemic. And so that cushioning phase demand is something where there are, as you mentioned, many cracks that have kind of come through. And we kind of sincerely hope, because there are a lot of questions that have come in on the chat, which are actually addressing a lot of the issues in terms of the cracks that have come in the cushioning phase. They refer to some of the questions are on startups, some of the questions are on, worker security. So there are a large number of these questions. Some of them are looking at tax refunds so that the MSMEs can preserve their capital to come out of this phase. So what we will do is we would like to collate some of these, send them across to you on email, and direct back some of these specific queries to our members in the interests of preserving time and closing the loop with all of them. Ravi has a question to ask as a part of this. He requested me just now. So I will request Ravi to take over and then close the proceedings. Thank you very much. It's been a pleasure. It's been insightful. And a lot of our members, I think, have found very useful insights, and a lot of dots begin to connect. And we look forward to having you soon in the future date with some improvements in the macro situation. And
Thank you.
thank you very much.
Hope to see you in happier times.
Yes.